EN, please. US 30, gold. All right, Kelson, we already did gold. Or Keslam. See head and shoulders. Aisha, on which pair? You see the head and shoulders.
It was the one that I believe you were just showing. I'm sorry, I had switched screens.
You're good. Was it this one or?
Yeah, I see that being a right shoulder too. That I see that being a right shoulder right there.
All right, let's go look to see if there's a left shoulder somewhere. Oh, damn. So we can kind of see it. Is this what you meant?
Yeah, I think so. I'm just training my eye.
No, you're good. So this is conceptually, this is what it would look like. Head. And then price would usually come down, retest, and drop. All right, so we have a head and shoulders. We're hoping the price breaks below, retests, and drops.
Oh, that's awesome. Okay, thank you.
For sure. All right, so somebody said Euro NZD. This is what I'm seeing, guys. I think I'm gonna call a sell signal on this in the members chat. Give me a second. All right, so we have 0 to 60. Match. 50% right there. All right, so we're gonna wait to call this in the members chat. What I'm gonna do is I'm gonna wait for an engulfing candle, kind of just something to show that this is gonna reject off of this area. If it doesn't reject off the 618, guys, we still have the 71 right here. So I'm really thinking that the moving average is gonna come down. Moving average is gonna be coming down and is gonna meet us at the 71 Fibonacci. And then we can see a nice bearish rejection candle. That's gonna be a triple whammy. If we can get that triple whammy, guys, I'm very confident that we can sell this off. It's gonna be a huge, huge, huge sell. So I'll put actually a physical note right here. Yo, guys, would you mind muting your mics? Here we go. So we're gonna do all right, your stop loss would be just above this yellow zone. So the closer to the top of this yellow box, the better. That'd be the smallest stop loss. So if you guys get in at the 71, the very top of the box is around 30 pips. 30 pip risk for, as far as I can see to the very bottom, 130 pip reward. 30 to 130, 4 to 1 ratio, so we'll be good. It's a nice looking trade. Oh, wait. All right, tip of the day, guys. Tip of the day. Since we're just going over charts, I can at least give you guys some helpful knowledge, or at least a little bit of helpful advice. Let me see. Don't focus on too many pairs, especially if you guys are new. I know a lot of you guys are probably taking signals only. You guys are probably taking signals from a few different places. The best thing I can tell you is to take your signals from as little places as possible, guys. You know, try to find people that are consistently either, not just consistently winning, but consistently making profit and have the right idea about trading. Because you guys would be surprised. You guys might join a signal service, and for 1 week, they are killing it. They're having a very lucky week, and everything that they call just hits take profit. And so you're going to assume that they're very good at trading. You guys got to understand that having a lucky week does not entail that you're going to be long-term profitable or consistent. What you have to do is align yourself with people who are consistent. Consistency is a lot more important than having one winning week. Okay, what this means is that when you're consistent with trading, then you can actually rely on the income. When it's kind of like, okay, am I going to have a winning week? Am I not? You can't raise a family, you can't pay bills, and you definitely can't raise kids. So what I'm trying to tell you guys is find people that are consistent and then emulate them, and that's how you guys can become a little bit more consistent. When you focus on too many charts, when you focus on too many pairs, you're going to be confused as to what the hell you're even trading. There's been a bunch of trades, you come back, this one didn't win, that one didn't win, this one got margin called, this one you don't even know what happened to it, you just don't want to look at it because it hurts. So what's really important, guys, is to be a little bit more responsible about your trading. Trade 1 or 2 pairs, find breaks and retests, you know, enter off the best possible entry, and most importantly, define your risk. Ask yourself a question, not like how much money can I make on this, it's really how much money am I willing to lose on this trade. And that's kind of like the mindset between consistent people and people who make money and people who are just kind of doing this day in and day out because they need some excitement. Xavier Lopez said, what's your Telegram? If anybody's on their phone right now, can you guys please put the public Telegram in this chat? The public one, please. We have a members only chat. We have a members signal service. We offer one-on-one coaching and mentoring and all that kind of stuff. And we do these kinds of calls every single day, guys. But I don't care if you guys are with us or with somebody else. The most important thing is find people that are consistent. Does this person's attitude change on a day-to-day basis? It's very important. Does this person's attitude change week by week basis? You guys know we lost that gold trade 4 or 5 times. I don't care. I didn't flinch. We knew that it was in this box the entire time. We knew that it was consolidating, guys. It wasn't like, oh, let's see if, you know, let's see what happens. Let's see. I mean, it was kind of let's see what happens, but it was really like we knew that when we lost these trades that we were going to find the best entries no matter what. We weren't going to miss the sell, and we sure as hell weren't going to miss the buy. And so that's what you guys have to understand. Whether we win or whether we lose, the attitude is still the same towards trading, and that's what's important to becoming consistent. It's a mindset game. This is not just like a click buttons, make money on the screen kind of situation, guys. This is really a mindset game. Can you do it over and over again? Can you keep yourself focused, et cetera, et cetera? All right, enough ranting, guys. Anybody else have one more pair? I'm going to choose one more lucky pair. Shout out ChartAddicts at GCAD. I see you. All right, let's get it done. GCAD is the last pair I will cover, guys. I appreciate all of you guys for being on the call. If you guys have not done anything for anybody today, I highly recommend it. It'll make your day feel a lot more fulfilling and satisfying. Call somebody that you miss, tell somebody you love them, tell somebody that you appreciate them, et cetera, et cetera. It'll make you feel better. All right, GCAD. At this zone, we broke out of this zone. Let's see what's happening here. So this harmonic, so this is what we do, guys. We draw a harmonic. When the harmonic is not confirmed, actually it could be confirmed. Wow. Yeah, if I'm going to be completely honest with you, I would wait to sell this until it breaks this black line. If you want to scalp it until this black line, you can probably catch a retest and scalp to the bottom. But really what I could see happening is this thing comes down here for a double bottom and then keeps going to the, goes to the moon. Everyone's like, how does that make any sense? This thing looks kind of bearish. Why would it go to the moon? Because, guys, harmonics theory says that just because the first touch, guys, please just mute your mics. Whoever's buying right here, That means that as soon as the price gets to the same exact zone again, the same buyers that were right here are going to probably buy price up again. Okay, I was using an example on this with a call. I was one of my members earlier. It's like, imagine you walk in a store and you see a great deal. So a great deal is like everything is half off, like 50% off sale right here. Let's say you go off a couple of weeks later, you come back to the store and it's still a 50% off sale. What makes you think that you're not going to buy it again? If you were here, you bought it at this price, and you come back and the store is it's at the same price, maybe even a little bit lower, the buyers that were right here are still going to buy the price up right here. So we can see a lot of rejection. So if you are going to sell this, I would put a sell stop right before this or right under this. So when price breaks, you can just be entered in the trade. Or if you want to be responsible, break, retest, continuation. This is your entry, and you can take a screenshot of this. So you got two options here. You have to see how price reacts to this bottom zone. Right, boom, boom, boom. Let me put these zone markers out here for you so you guys can see what we're talking about. Your sell entry and your buy entry. Only a fool has one option, guys. I love confidence, and we always pick a bias and we stick with it. But only a fool believes that he's going to know exactly what's going to happen in the market next. Okay, we could call a buy, and because I've seen this a million times, I know that usually it's a buy, right? That doesn't mean that everyone who's trading the market is going to agree with me. They might sell the shit out of this market, and I could be wrong. So we keep two options open so that if I come back and I'm disappointed, quote unquote, in the result that I wasn't right, I can at least take the other side of the trade. I can at least go shake off the loss, whatever monetary loss, come back and think rationally, be like, okay, if this thing wasn't a sell, could I at least take advantage of the buy? And if I am going to take advantage of buy, I don't want to be in this like, oh shit, I just lost a trade mindset. I want to be in that fresh mindset of, okay, what's the best place for me to take this trade? And then that's why I kind of predetermine what I'm going to do in my trade before I enter a trade. When you enter a trade, you're now emotionally involved in the trade. When you're emotionally involved in any decision, you can't make the best possible decision. You can't make a quality decision. And when you can't make a quality decision, you're thinking subjectively and not objectively, guys. So do not let emotions make the decision for you. Do not let emotions pull the trigger for you in the market. Ask yourself, am I in the right state of mind to trade after taking a loss? And if you are, you can take the opposite side of your trade. Okay? There's no reason for you, like, it's 50-50 chance. It's either going up or down. It's not going down. Why not catch it up? That's all I got to say, guys. I appreciate every single one of you guys for being on the call. If this is your first time on a Chart Addicts call, welcome. If you guys are a regular on the calls and you're not a member, what are you doing? The rest of you guys, I hope you guys have a blessed week. Do something nice for somebody. I love you guys. Peace, love, abundance. Take it easy.